Hello again and welcome back to RegalX Training Academy video courses. My name is Daniel Garcia and I'm your instructor on this video course series. Today we will continue with course number 1 of the intermediate video course sessions. In this video today we will talk about the different market types and asset categories. Now what you can see here on our website, just below the trade now, you can see that you can trade shares, indices, forex, commodities, and cryptocurrencies with CFDs. All of these are different asset classes and not everyone knows exactly what they are. So we want to shed some light on these just right here in this very video. Now let's start with the shares. Now shares are usually when you have a listed companies on an exchange. People can buy small fractions of these companies and they are called shares, and they are actually traded on exchanges. Very known examples, for example, is Apple or Amazon. Obviously there are a number of companies here: Caterpillar, Cisco, eBay, Facebook, Google, and Goldman Sachs. So you can trade all sorts of different shares of a company. Now, what you should know about shares is they normally don't fall to zero. If they fall to zero, it means the company's completely dead. But shares are also traded on certain hours. You cannot trade them 24 hours, or at least there is no pricing, which is why you can see here we have the US shares here, and we are now at 1:20 p.m. European time. So you see that there's no pricing moving here simply because the exchanges in the US are closed. So you should take this into consideration. But you have the possibility to trade all sorts of different shares, also European ones. We offered you a very wide selection of shares that you can actually trade. Secondly, indices. Indices are basically a combination of shares. For example, the S&P 500 consists out of the 500 biggest shares companies, so to speak. So it is an index built out of 500 underlying companies, and this is how you build the S&P 500, or you have the Dow Jones where you have 30 companies, which is why I called US sturdy same. The German DAX is also a combination of 30 German companies which form the DAX index. So an index usually is a weighted average of a number or of a certain number of companies from a certain country. And in the US, obviously, we have several of those. But for the US to trade here, we also have the German DAX, the US S&P 500, the NASDAQ, which is a technology index out of 100 companies in the US. But we also have the European indices like the Italian index or the Spanish IBEX, the French CAC. There's a number of indices out there that you can actually trade and offer you all sorts of different opportunities on the market. Next is Forex. Forex is what the word already says, foreign exchange. This is the world of trading currencies. You can trade euro against dollar, you can trade Australian dollar against US dollar, you can trade the New Zealand Kiwi against the US dollar, dollar against the Japanese yen. So there's all sorts of different currency combinations, what is called the majors and minors. The major currencies are the big ones like the US dollar, the euro, the British pound, the Japanese yen, the Australian dollar, the New Zealand Kiwi, and the Canadian dollar. Those form the majors. And if you can, there's all sorts of combination between those which are called majors. And then there's also smaller companies which are called minors. For example, Norwegian krone, the Mexican peso, the Hungarian currency. You have all sorts of combinations here. And this is what is called major or minor across. And you can see that there's all sorts of combinations, like here you can see the Turkish lira against the Japanese yen or the Chinese yuan, against the US dollar, Denmark krona against the US dollar. So there's really a huge selection of currencies that you can trade actually against each other on our RegalX platform. The next one is commodities. Commodities is the world of tangible things such as we have gold, which is the XAU for Arum, and then we have silver XAG. We have also, but all other commodities like oil, for example. We have the U.S. oil. We have Brent out of Europe. So there's different types of commodities that you can actually trade. And here again, you should pay attention that commodities are not open all the time. They have specific trading hours. They're subject to a lot more cycles. For example, the Forex currencies, they are 24 hours. You can trade them from Sunday opening, which will be Monday morning in New Zealand, until Friday night, Western U.S. time. And that's why the foreign exchange or the Forex market is known to be the biggest one in the world, because it trades all around the clock, while other markets, like commodity markets, have certain hours that they react to. And the factors that move these markets obviously differ a lot as well. The next one that we have are the cryptocurrencies most known. The famous Bitcoin, which has been somewhat of a tough market in 2018, and after it has been like even more crazy. Rocketing in 2017, a very interesting asset class. We have a number of selection of cryptos. Actually, I can show it to you when we go to the symbols. You can see, and here you can again see how we are. We're breaking it down into Forex equities. Equities is another word for shares, basically. Then we have crypto. So in here you have Bitcoin Cash, Dash, Ethereum, Litecoin, Monero, Zcash. So all different types of altcoins as well that you can really trade on. So it gives you a huge depth of market of things that you can actually trade. Now, one thing you should pay attention to is that, or which you will learn over the course of our series, and also when you trade, is that markets show correlation. It means that if, for example, there is risk appetite in the market, then usually you will see the indices or shares go up while the gold price not go up, which it has been recently seen. Gold is really stagnating here while the stock prices continue to recover after they sold off earlier in the year after their massive increase over the last years, in fact. So what we can see here is that when certain markets go up, others go down. So there's a certain relationship between different markets, or what is called a correlation. And one thing that you can very often spot, for example, dollar yen goes up means gold dollar to go down. Why so? The yen is known as a safe haven currency, for example. And if the dollar goes up, it means the yen is going down against the dollar. If the dollar yen goes up, it means the yen is going down, meaning a safe haven currency is being sold. Meaning there's less appetite for a safe haven currency. What is gold? Gold is a safe haven currency. That's why gold goes up when yen goes down, and dollar goes up when dollar goes up against gold and yen both, because they are both very much, let's just say, safe haven related currencies or asset classes that correlate very, very well with each other. Now, we always look for these kind of combinations that we can trade in order to be successful on the market. So usually when it makes sense to not just be nakedly exposed into one trading asset, but to understand how assets correlate with each other and try to trade in both directions in order to be more hedged and more supported in your trading effort. And if you like what you have been hearing and you would like to know more about it, I happily invite you to our next trading session in the same video course series, where we will talk about how you can customize your trading desktop to make sure that you get the best out of what you see in order to catch the very best opportunities in a non-cluttered way. Thank you very much for listening in, and we'll be back here in the next episode.